Good morning, and welcome to episode 80 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, July 6th, 2022. We hope that everybody had a wonderful, enjoyable, peaceful, relaxing Independence Day weekend. I'd be remiss if I didn't say our hearts go out to the victims of the violence in Highland Park, Illinois. We all pray that we soon see an end to these senseless acts of violence pitting each other against each other. We hope for an end real soon. In the markets the past week, gold, silver, and platinum all got pretty well hammered going into and coming out of the long Independence Day weekend. And those that have listened to me over the years know that I've often looked to long holiday weekends where we see closed markets, thin trading around the globe to get a feel for the sentiment of investors and speculators. And if they want to take a position in an asset going into the long holiday weekend, it usually means that they're bullish. If they want to retract or pull back from an asset going into a holiday weekend, it means they're bearish. Clearly, the sentiment is leaning toward bearishness for gold, silver, and platinum at this point. Palladium kind of held tight. The 1780 level has been a key technical level for gold. We trade below that here today, around 1766. We'll see if we can jump back up above. We have touched 1780 several times and bounced back up into range between 1800 and 1900. So we'll be watching for that going forward. Oil also slipped back. It dipped below $100 a barrel. Hopefully that'll give some relief at the pumps. But really the story over the past week has been the US dollar. We've hit 20-year highs on the US dollar index near 107. And those that follow that index know that it's the dollar against compared to a basket of other major currencies: the euro, the Swiss franc, the Japanese yen, the Canadian dollar, the Great British pound, and the Swedish krona. And when it dips below 95, which is where we were at the end of last year, beginning of this year, when it dips below 95, that's bearish for the dollar. Above 95 and moving up is kind of bullish. And we've moved up with a vengeance. 11% in a very short period of time indicates confidence in the dollar. If there's confidence in the dollar, then people tend not to need gold as an alternative. So we're seeing a little bit of interest in gold wane as the bubble deflates and asset values deflate. Now gold is deflating along with the stock market. The Dow is down 16% thus far this year. The S&P is down 21%. NASDAQ down 29% so far this year. Gold is only down gold is up about 3% so far this year. It was higher. It has deflated with the equities, but not nearly as much, and that's what we tend to see from gold in a deflationary asset deflationary environment like we have right now. We'll be watching very closely to see what happens next. The FOMC meeting, Federal Open Market Committee meeting, expected to give us another 75-point rate hike, or 0.75, 0.75% on the 26th and 27th. We'll see how that goes. Let's take a look at the markets this morning. Gold is down to 1766.20. That's down 3% from 1821.70 last week. Silver's down 8% to $19.25 from $20.92 last week. Platinum down 7.33% to $870 from $939. Palladium, only precious metal that's up a third, relatively unchanged, up $8 to $20.26 an ounce versus $2,018 last week. The gold-silver ratio, with silver falling further than gold, is up to 91.70. Again, getting into rarefied air, a screaming buy signal for both gold and silver with a GSR, gold-silver ratio of 91.70. And as I mentioned, the dollar index is soaring at 106.73. Be sure to take a look at tomorrow's newsletter, information line. We've got a few guest articles, and we'll do a little bit more digging into what's going on in these markets and why even though it doesn't look good for gold, you need to trust gold in this environment. It is still doing its job. As always, we'd like you to go ahead and like us and subscribe to us to the YouTube channel. Send us your comments and questions so we can share them on the air. Go ahead and follow us on social media for ASI. Subscribe to our newsletters and twice weekly alerts. And don't ever forget that getting rich starts with keeping what's yours.